Hello everyone and welcome back to Sudden Wealth. What's up? If you guys are wondering why I did this stupid intro, I have a bet with a friend or a challenge with a friend, in which, as I've mentioned um, in my previous video, I got into a coin in Solana called S coin, and basically, if the coin reached $1.5 million, I would make this intro. As you guys know, I disclosed it last video. I got in at 360k. I sold my investment plus a nice profit and I left the rest there, and that's the end of it. So, but let's start today. Don't forget, guys, leave that like and subscribe. As you guys know, it greatly helps the channel. Now, yesterday I was to record, but I thought there were so many channels that get recommended, or I can see in the analytics that people that watch my channel watch certain channels, that I was like, there were so many channels doing live streams of 3 hours and plus, and I thought, do I really want to make a video? Probably my audience is completely exhausted from YouTube at that point. So I said, look, let me make it one the next day. I think it makes more sense. People are a bit more relaxed, and usually, as we were seeing what was happening in the pre-market or the aftermarket, I thought, oh, it's a deep red day, which usually are some of the days that I like the most. Now, before we get to the tariffs, there's a few notions that are important to understand, because a lot of people talk about it, but I get the feeling they don't do a very good job explaining it. I think some of them just repeat what other channels say, and that's the end of it. And other channels actually are so used to talk about it that they forget to basically bring it to the basics. So bond yields have dropped, TLT is going up. Actually, it's starting to suggest a golden cross on the daily time frame, which means the 50 crossing the 200 on the upward movement, which is great. That's loosening of financial conditions. Why is it loosening of financial conditions? Because that allows the government to roll over debt at cheaper rates. It influences things like mortgages, which means people can buy houses again. And instead of paying 7% or 8% interest, they can start paying, 6 or 5.5%. So that's why it's so important, and basically makes bonds less attractive, which means risk assets become more attractive. Most importantly, treasuries are the number one collateral used in the financial world, in the clearing houses, in all the settlements, etc., between future contracts, commodity contracts, etc. So basically what you need to understand is, of the trillions of financial transactions, the number one collateral is bonds. So if the collateral goes up, you need less of it. There's less pressure in the system. Liquidity can flow to other risk assets like stocks, crypto, and the likes. So that's why when you see the bond market collapsing quickly, you see eventually the stocks and the risk on assets to go into prolonged corrections. Then the dollar. The dollar completely collapsed, and it's the opposite, is actually hinting at the dead cross. That's when the 50 crosses the 200 day, or the 50 weekly crosses the 200 weekly, which is very important because that means watch out below for the dollar, and we need the dollar down for because that's the equivalent of multiple Fed cuts. Why is the dollar down so important? So this is the basics that most people don't explain. Because the rest of the world outside of the United States hold huge amounts of dollar debt. Now that can be at government level in the reserves, but it also can be it can be a dollar debt by governments or public company, meaning companies owned by the government, or, and this is the majority, private debt. So think about European companies issuing dollar bonds. Think about Japanese companies dealing with India in US dollars. Think all of those things. So if the dollar is higher versus your currency, the more money you're losing servicing your debt, because you need to go to the market, trade your currency for dollars, and the more you lose doing this, the less money you have available for other stuff. Business expansion, buying assets, whatever the case may be, you have less money of it. So this is why a strong dollar is a wrecking ball, is a sledgehammer towards enemies, friends, neutral countries alike. So a weaker dollar is helpful for everyone. That's why. And now this is very important. Oil also collapsed to $65 or something. Now this is important to understand. What were the three things that both Trump and Scott Bessent have been extremely consistent saying for months? We need lower rates. We need a lower dollar. We need lower oil prices so inflation can come down. What do we have? Lower dollar, lower yields, lower oil. So the first step is done. Liquidity can now come into the system also via the Fed. So basically, it's giving the conditions to the Fed to also fight in terms of if we indeed go into a trade war. Now let's go to the tariffs. Obviously, the tariffs presented by Trump are ridiculous in the sense of Vietnam is charging the US 90%. Of course, it's not charging the US 90%. Now, there's something to be said about unfair trade that it's beyond purely tariffs. So China does have tariffs, for example, not just in the US, in other countries as well. But for example, what does China do that it's highly unfair and has done it over the decades? Number one, artificially devaluing the currency to boost exports. Number two, if you are a foreign company doing business in China, for many years, I'm not sure if this is still the case, but for many years, you had to be in a joint venture with a Chinese company, meaning you couldn't open a 100% owned subsidiary. You had to team up with a local partner, and most of the time, let's be honest, on many times, technology got stolen in the process. But when China would go to Europe or the US, they could just have their own subsidiary, no problem. So that's unfair trade. Another one is, for decades now, China has dumped steel and chemicals, particularly in Europe. And the way they practice that they have prices so low to gain market share is by having the state funding these companies, which allows them to have prices that otherwise playing level field competition would not allow for. Meaning, if a similar company would do the same in Europe, it would go bankrupt. Unless, of course, the German government is backing them. Then you can do it at the expense of debt or your taxpayer. So this is the situation. Now, the tariffs came way more aggressive than what I expected and what the market expected. So you have the reaction. Where are we today? Stocks, the stock market, the indices of the US, so the Russell, the Dow Jones, the S&P, the Nasdaq, they are all in highly oversold territory. Crypto actually held better than many assets. Well, first of all, there's no tariffs in crypto, so that's helpful. But for example, I mean, Bitcoin and Ethereum are back to what, Sunday prices or last week prices. That's the big crash. So we crashed to not even last week prices. So, or I think you could go back on Sunday. I think Sunday we were pretty much about the same place where we are today. So crypto has been doing better. Now, why the tariffs now? First of all, you need to do this. If you want to do this, you have to do it at a time that you are very far away from the midterms, to basically give time for the uncertainty and the markets to adjust before you get to that election period. So that's one of the reasons. Number two, it is true to a certain degree, not to the 90% tariffs, but it's true that for the most part, countries have levied import duties and tariffs in the US on a scale that the US was not doing the same thing, which eventually led to massive trade deficits and the likes. Now, why, the question you may ask about why now? Why didn't the US care over the years? The reason is very simple. Because the US is the world reserve currency. They don't have to produce. They can just print the money or issue debt and pay for the deficit, because the other countries, the other companies of the foreign companies will accept the dollar and the bonds and the US dollar bonds. So basically, you need to imagine what's happening. Those countries are producing the goods and services, particularly the goods, and the US is sending digits on the screen, which is very easy to do, and getting the products. Now, what is the problem with, and I say, then that was great, right? What's the point of changing? Yeah, you need to understand something. This is fine for the United States as a country. It is not fine for US companies. As US companies start to be unable to compete on this basis, they start to close factories in Detroit, in Pennsylvania, in Michigan, and they start opening them in Mexico, China, Germany, Japan, Vietnam. And although the end result is the same, which is the goods come to the US, you just destroyed your manufacturing capability as a country, and you just destroyed the livelihood of entire communities in your country. That's why you have the opioid crisis in these regions. This is why you see places completely destroyed. If you go to any of these states, you'll see exactly what I mean. The once glorious middle class, highly manufacturing capabilities are now all gone. And Trump wanted to do something about it. So that's one side of the equation. The other side, so we have two steps. Why did we get here? Why is this happening? Why now? Because of the elections. But there's a reason, another reason for why now. Now, basically. Europe is in a very fragile position. It has been attacked, it's been plagued by conflict. Sometimes the Europeans forget that the war is happening on their continent, not the US or China, whatever. Number two, what happened to the biggest economies of Europe, with the exception of Spain, because Spain actually grew faster than the US last year? France, contraction. Germany, contraction. UK, flat with high inflation. Italy, flat. And now you lose, or you are in a war of trade with your number one partner. Tough. China been fighting against deflation non-stop. They got the US dollar lower as they wanted so they could stimulate, but they're still fighting deflation. Where is deflation coming from in China? Overcapacity. Overcapacity and too much debt in the system, which is now deflating. What happens to that overcapacity if you lose your number one customer? You have even more overcapacity and you have even more deflation. And now you ask me, no, but deflation is great, right? Because if my cost of living is going down, I'm happier, right? You are happier as a citizen, but you're not seeing it from the perspective of who rules the country. Who has the largest debt in China? The Chinese government. What is deflation? Deflation is my future currency is worth more than my current currency. Okay, but if I have debt, I'm paying not just the same currency, I'm paying currency plus interest on a currency that is getting more valuable in the future. So this is terrible for me. I am borrowing money as a government, and as companies, I'm borrowing money, and as people, I'm borrowing money to buy real estate and all of these things. I want, when I'm paying my debt back, I want that debt to be worth less, which only happens with inflation. That's why governments love it, because they have to repay their debts. They have to repay their debts with interest, so they want the currency to be worth less. But how is that possible if they are facing massive deflation? So how do you solve this? Oh yeah, you cut the overcapacity. But what does that mean? That means you fire half the people that work in manufacturing in your country. That's what it means. But don't forget, you don't have political freedom in China, so you have prosperity. Do you think your population is going to be happy if you have to fire huge amounts of people? I don't think so. So this is the time where the US has more leverage than usual. Notice that Canada and Mexico were exempted from this. My feeling, contrary to what everybody believes, I think they are much closer to get a deal with Trump than any other countries. And here comes the game theory. If you see the US striking deals with countries like Canada and Mexico to start, it becomes game theory. I need to get my deal as soon as possible because the other countries getting it, the first ones will get the best conditions. Because if you're country number 140 doing it, the US most likely doesn't need you much anymore. See what I mean? But you need them because you need somewhere to sell. See the point? So it will kickstart some level of game theory. At this, look, this is all my opinion. I can be completely wrong. Can be a complete disaster. Blah blah blah. I am just saying what I believe. It seems to be happening at the moment. And yeah, once again, when you start it, I think a UK deal is also very close because I think the US ultimately still trusts the UK more than the European Union. So I'm not surprised that that's the case. I get the feeling that particularly US and Canada will sign a massive deal that will involve a lot of energy, lumber, metals, minerals, agriculture, this kind of stuff. But we'll see. We'll see. I think that deal is much closer than people think. But maybe I'm completely wrong and they have the worst, most bitter fight of all time. And here it comes. Liquidity has been massively increasing. Financial conditions have been massively loosening. We are at a moment now where everything is oversold. I think we are, and basically what's happening right now? Why is tech falling so much? because the tariffs are on goods, right? I mean, most of tech is actually services, if you think about it. But why? Now what's being priced in is, the tariffs are much worse than what people thought. Retaliation will come. Probably recession will follow. Most likely. I mean, I think recession is now priced in. Pretty much, recession's going to happen. Recession in Europe's going to happen. Recession in Asia is going to happen. It's going to be world recession, massive trade war. And then, this is the key, the tariffs will create inflation. So the Fed can't cut rates. So because the Fed cannot cut rates, then asset prices go down. And what suffers the most? The Russell 2000, the shit coins or the shit stocks of the US, the equivalent of shit coins, and the Nasdaq, because it's starting to price in recession and lesser liquidity. The Dow Jones, which is industrials, actually tends to perform better. Obviously, there's a way to get away from all these tariffs. You build your plants, even if you're, let's say, an European company. So you have a lot of European companies that have strong presence in the US. Manufacturing, utilities, energy supply, whatever. Those will be fine because they are already in the US. Others will struggle quite a bit. So now what's been priced in is the worst case scenario. Tariffs are much worse than everybody thought. They seem unreasonable. The retaliation will be severe. This will throw the US into recession, at least the US, potentially other regions. Unemployment will rise, inflation will rise, we have stagflation. The Fed can't cut because inflation is high. So asset prices go down. While at the same time, on the background, liquidity has been increasing non-stop. Inflation in the Eurozone is back to very low. Trueflation in the US is at 1.4% and dropping like a stone. QT is about to end, but this is not being seen because at this moment, it's very out of the way from what people believe. I think there's a very good chance we bottom this week. Can we still go down another leg? Yes. Do I see Bitcoin going to like what I've seen? I mean, I've seen stuff like 50K, 40K, 60K. No, I don't think so. I mean, can we go to mid 70s and do a double bottom kind of stuff? Maybe. I don't think so. To be honest, I don't think. I think there's a very good chance we bottom this week. Maybe there's a scare tomorrow with the job report. I mean, that's my feeling. I think next week CPI will probably surprise to the upside. And then the issue is going to be with the earnings calls with companies, because basically the forward guidance will all be either negative or uncertain or no forward guidance whatsoever, which will create some uncertainty, which is to be expected. But here's the questions now that you need to ask yourself. Are liquidity conditions improving? Yes. Are financial conditions loosening? Yes. Cover that in the first half of the of the video. Now here's the question for you. What happens if trade agreements start to be made? What happens if there's a peace deal in Europe? What happens if tariffs are much less inflationary than people think? What happens if inflation comes down sooner than expected and the Fed can resume doing QE? Is that at all priced in at the moment? I don't think so. I think we start to price in really bad stuff, which makes me feel that the majority of the pain, if not all the pain, has already been felt. But please come to the comment sections, destroy me, ask me something, tell me what you think about it. Drop a like and subscribe, even if you hate me. That's all fine. As I said, I do this as a hobby. I'm not selling you anything. I'm just sharing my view and my opinions and the way that I'm thinking about it. Feel free to completely rip me a new one I always welcome it. Just keep my family out of it, and that should be fine. And with that, oh, by the way, one thing I wanted to flag. Some of my meme coins, like Hoppy, Andy, even the post-chain coins, etc., have done quite decent. Is that the case for your coins as well? Meaning, it's starting to give me the vibes that the worst part, particularly for altcoins, we have nothing left but believers almost at this stage. Is this the case for you as well? Or I was just lucky with a couple of the picks? That can be the case. Let me know in the comment section. Don't forget, like and subscribe, and I'll catch you in the next one.